Welcome to a webinar with Investtech. This is Stefan Nordal speaking, and it's 5:30 on June 25th. We will today look at how to use Investtech system in practice. You're welcome to ask questions during the presentation in the chat function, but please save the most demanding questions towards the end. I will be available on the phone and on email to answer any questions after the presentation. And I also highly suggest that you are ready to log in, as we will go through the system after a short theory session. So today we will go through some theory to freshen up. We will go through some specific examples. We will show you how to use our system in practice, and we will also update you on the status of our portfolios and also the market in general. Investtech is, as you know, a company from Norway, founded in 1997. We are working with research in behavioral finance and use quantitative analysis methods. And our research is supported by the Norwegian Research Council, and the results of our research is available in our analysis and in several articles that are published on our websites. We provide specific recommendations on all shares in 12 different markets, and in addition, commodities, currencies, and indices. Through the use of advanced mathematical and statistical algorithms, we build on the theory within technical analysis. The analysis is therefore completely independent and objective. We're not making money on how many trades you make or how much you invest. However, we are making money on satisfied customers who make profitable investments. And this is important to emphasize, because as a customer with us, you can only expect the best for us, and we have, in a sense, the common goal in terms of what we're trying to achieve. I'm confident that as long as you follow our research findings, you will also make money on your investments over time. You're welcome to contact me at any time, as I am your customer advisor when you are a customer with Investtech, and our team is dedicated to personal service. So as an investor, we're faced with two approaches, technical and fundamental. The fundamental analysis evaluates the market, the sector, the companies, such as policy rates, the product the companies provides, or the management. And these dimensions changes relatively slowly, while investors' expectation and evaluations of these values changes continuously. This means that we can have large price movements in a stock without the presence of some new fundamental conditions. The fundamental analysis gives us confidence, while technical analysis is used as a timing instrument. This means that fundamental and technical analysis are complementary and can give us an understanding why the market behaves as it does. The fundamental analysis, though, is time-consuming and difficult, especially in terms of assessing what is priced into the picture. The technical analysis is significantly simpler and takes direct account of all relevant information which investors are at any time factored into the price. We think it might be wise to use both forms of analysis, but of course we will place the greatest emphasis on technical analysis. The technical analysis allows us much faster to sort out the best stocks, which we will come back to later in this session. Most of you attending today probably know this all too well, but even the most experienced investors sometimes need to freshen up theory. The four main key elements within technical analysis, which we build our strategies around in terms of what we seek to find in good investment opportunities, are trends, support and resistance, formations, and volume. Investtech has published a book on technical analysis. We recommend our book both to new customers as well as experienced investors. It is available on our website, and if you're a customer with me or with Investtech and you do not have it yet, please contact me after the presentation and I will give you a copy. Trends. The trends are among the most important aspects within technical analysis, and in many cases we put the most emphasis on this technical indicator in our analysis. They are both visual and intuitive, and they describe the direction in which a share is moving. A rising trend indicates a persistent and growing optimism among investors, often as a result of a positive stream of news regarding the company. We recommend that you buy stock in an increasing trend and also buy near the floor of the trend channel. We've done research on trends, and we find the results quite unique and interesting. Shares with the buy signal from a rising trend has consistently given good excess return over time, which significantly outperformed the benchmark index. This research report on the Norwegian market shows that a share after buy signal has an average return after 1 month at 2.7% and at 12 months 20%. The benchmark index cut is respectively 1% and 12.3%, giving an excess of 1.7% and 7.7% respectively for 1 month and 12 months. Similar results are found in other markets, which imply that the research finding might apply with similar results for other markets. If you expect the market to go sideways or upwards, you will statistically do better by buying shares in a rising trend. The other main element is support and resistance. Support and resistance indicates how a share tends to turn. It is determined by previous tops and bottoms, high cumulative volume, round numbers, especially in a rising market. Therefore, we try to buy stocks when it approaches support and sell the stock when it approaches resistance. This gives us therefore useful information in terms of what we should enter and when we should go out. Formations, which is the third technical element, these interprets the psychology among investors. They give us specific signals on the further direction of the stock. Head and shoulders formations is a trend change formation and identifies that the market has peaked. This gives us then a sell signal when it breaks down and that investors expect a further decline. Reverse head and shoulders formations identifies panic behavior and should suggest that we are approaching depression and fear. The market has now fallen too much and a more positive development has started. It gives a buy signal when it breaks through the neckline, as you can see in the right top corner. Similarly, double top and double bottom, where it says that the trend has reversed and gives a concrete signal of the further direction. Rectangle formations are often short formation and reflects the current uncertainty or pause in a further direction. Investors are waiting for new information or signals. If the price breaks down, this yields a sell signal and there is an overweight of pessimism. If the price breaks up, there is an overweight of optimism and we get a buy signal. The results from a research report we conducted on the Dutch market is quite interesting. From 1996 to 2004, we identified buy signals from 790 rectangles, and on average 67 of these stocks went up 1 formation length within the time limit. Similar results were also found from 1996 to 2008 in the Norwegian market. This opens up for the notion that these results can be found on other markets as well. Volume. The volume balance measures investors' behavior and provides support in the further price direction. It confirms or weakens the trend direction, violation of support and resistance, and signals from formations. It gives us an indication of the future trend violations and signals. It also gives us confidence and trust, and we believe it is an underestimated indicator for technical analysis. We want to find stocks that have a positive volume balance. This means days of high volume and price increases. So to sum this brief theory session up, what we look for is positive trends, buy signals from formation, and close to support, and in combination with positive volume balance. Now we're going to log in the system and look at some practical samples and learn more about how you can use theory and our system in practice to make better investments, which is the purpose of it all, after all. Let's start with Finland, and let's click on the country Finland. And if you're international, I suggest that you go to the top and you delete FIN, and you type in 000 if you want an English version. Then you're looking at the Finnish market with an English language. What we first will do is look at the OMX Helsinki. You can type it in here. And then we see the OMX Helsinki index. The index has been in a rising trend, which you can see here. We can click on the total analysis and see the medium long term. The index has broken up through a rectangle formation, and a further increase is indicated. If you scroll down, you can see the short, medium, and long-term analysis of the index. It is important to look at the resistance level at 7,560 points, and also the support level at 18,000, and the further rise up to 8,018 points is signal here. What we will first do today is to look at today's case in Finland. Today's case is Neste Oil Corporation. If you scroll down, you can look at the extended analysis. Again, if you go to the medium term, you see that the stock has been in an increasing trend, and a continued rise is hence expected. Important levels here to monitor is the support level and the resistance level. In order to find the right candidates, which is the goal for everyone here, is to look, for instance, you go to the top 50. Here you see the most technical positive stocks. If you're a professional customer, you have the privilege of looking at both short, medium, and long term, as well as overall analysis. We can look in the medium term, and I want to look at a company called Cramo. If you scroll down, after clicking on the total analysis, which you have as a professional customer, you can see that the stock is assessed technical positive for the short, the medium, and a neutral score for the long term. For the medium term, it is in an increasing trend, and a continued rise is hence indicated for the medium term. Another tool for selecting out the right stocks is stock selection. Here you can sort the right stocks based on liquidity. And if you go to the 10% most liquid, and again, you go to medium long term, and you look for the technical positive stocks. Here we have UPM Kymmene with a technical score of 92. UPM Kymmene is in an increasing trend, and you can see the rectangle formation here at the beginning of June. It broke up through the resistance. This is a nice way to select out the right stocks based on your investment strategy. If you click on a total analysis, you can scroll down and can look at both the short, medium, and long term. For the short term, we have it as a weak candidate with a score of -29. But for the medium term, it is a positive candidate. If you go back to stock selection, if you're interested in other types of measurements, you can, for instance, go for the 10% most liquid. You can also sort them by volatility. You can also look for a table view, but you can also look for graphs. If you go to the medium-term charts, you can see the stocks based on the graphs, which is more visual and easier to look. You can scroll down, you will see Outokumpu, Nokia, Autotech Oy, Neste Oil Corporation again. This tool is very nice when you want to look for the right candidates based on your needs and based on your investment strategy. Next, we will go to trading opportunities, another tool at the professional level. Go to table view, and you can select the stocks based on the specific needs or the investment opportunities you're interested in. As we've seen, the rectangle formation has a nice, it's a nice tool, and you can look for here we can look for rectangle buy in a rising trend. You can go for medium term, and you can click on a ticker, and then you will see the OMX Helsinki index is a trading opportunity. We've already gone through the OMX Helsinki, but this way you can sort out the right trading opportunities based on your needs. As you've seen from the research, the rectangle formations have a statistically chance of 67% of going up to the objective. We will now go to the model portfolio, which is a theoretical portfolio. If you scroll down, we will see the model portfolio. This week we made 2 changes in the model portfolio. We added Citycon and Tikkurila Oy. We will look further at Citycon, and again go to total analysis, where you get the medium long term. You can see the stock is in a rising trend. It is important to also look at liquidity and volatility. And for this particular stock, the liquidity risk is medium. And you see that for the last 66 trading days, the liquidity was 1 million. This is fairly low, but it's still a nice level. If you go back to more portfolio, you will see the stocks we have currently in the model portfolio. And keep in mind, the model portfolio is a theoretical portfolio, and we do not recommend that you follow it necessarily to a full extent, but it's nice to get inspiration from the model portfolio when you want to look at the right candidates. The main objective of the model portfolio is to get return over time. After we started the model portfolio in 2000, we have made a 322% return after commission against the benchmark index of negative 47. Lately, we've been a little bit behind the index, but this is quite normal. And it also shows that the most important thing is to look at it over time. Now we will switch focus and look at the Dutch market. If you click on country and go to Netherlands, and again, if you want to follow this in English, you delete DUT and type in 000. Then you get the English version, which is nice to follow if you don't speak Dutch. We will start to look at today's case, which is Aegon. And you go down, scroll down to the external analysis. Aegon is in a nice increasing trend and has given a rectangle formation, and we expect it, as we've seen, to rise up to the full extent of the objective. You can click on total analysis. You can see the full analysis of the stock, and again, this is only available at professional level. You can see that it has a score of 82 for the short term, 91 for the medium term, and 80 for the long term. Again, let's go back to the top 50. And we're still looking for buy candidates. And we can go for the medium term. And we can click on the first stock, which has a score of 94, which is Aperam. Again, we see the rising trend since the end of last year. And now it is approached a price of 24.74. In addition, we see that it has given a trading opportunity, which we will look at a little later. The resistance is broken and it's close to chart max. Here we see the buy level, which is around 24 to 24.3, the target of 25.6 to 26.02, and a risk-reward ratio of 1 to 2.70. Let's then go to trading opportunities, where we again look for the right candidates. Again, trading opportunities is only available at the professional level, or of course also at the institutional level. This time we will look at inverse head and shoulders evolving with a positive volume balance. And sort if you can see any candidates. And in this case we didn't see anyone, so we will go back to a rectangle formation evolving in a rising trend. Go to the medium term. You see we have 4 candidates here. Let's go to the second, which is Randstad. And here you can see the rectangle formation, which is evolving. For the medium long term, the stock is assessed as technically positive and has broken the floor of the rising trend. The volume balance is quite negative, and we would like to see a more positive volume balance. If the price goes up and through the resistance of the rectangle and forms a rectangle formation, we will see a sell signal. A buy signal. Let's then go to the model portfolio. Again, the model portfolio is a theoretical portfolio, and we do not recommend that you follow it to a full extent, but it's nice to get inspiration. Since we started the model portfolio in the Netherlands, we had a 159% return against the benchmark index of -29. We'll look at one company, Delta Lloyd. Delta Lloyd is an increasing trend. It's close to the floor of the trend channel. We also see that it is a trading opportunity, since it is in a rising trend and close to the floor. The buy level is from 18.2 to 18.8, with a target of 21.8 to 22.8. And the time horizon is 73 to 109 trading days. And here it is important that you put a stop limit, and the key issue is to maximize your returns and minimize the losses. I hope that this presentation was helpful, and if you have any questions, you can contact me by mail, or you can even call me if you want to discuss anything over the phone. I want to say thank you for following this presentation, and I wish you a great afternoon. Thank you.